Hello, this is Short Me Tina from shortmetina.com doing a quick video recap of this video is actually going to contain 3 trades. And believe it or not, we were actually stopped out of 2 of them and hit our target on 1. So you got to take the good with the bad, you know, the bad with the ugly, etc. So this kind of shows that we're not perfect here in the community, but overall we end up ahead, or we end up net positive, because we ensure that no matter what, we're keeping our losses to a minimum. So the first ticker that we actually took the trade in is ticker DATA, data. So again, the consolidation pattern is, in my opinion, it's relatively reliable, but it's not reliable 100% of the times, right? So trying to trade the pattern that we've been trading in the community for the past 2 months, and we've been right on, I would say, a good 20 to 25 of them, don't quote me. I said, well, let's trade the range once again. So I've already kind of drew some of the ranges that I see here, right? And we got into this trade, believe it or not, on Friday when the market sold off, and I alerted it with a buy zone of 60 to 61, right? So from, we can say, late May up until the sell-off, the lowest that this stock traded at was around 61, hence why I thought 60 to 61s would be a good level of support to get into. So we kind of crashed through on Friday. It didn't stop us out because we weren't in the trade at that point. We used that as a buying opportunity to get into that trade, and then Monday morning our stop loss was hit. Can't say for sure exactly what our stop loss is, but it's usually, generally speaking, about a 3% loss. So we lost 3% on this trade. I want to say one thing about this pattern as well. The longer the range ensues, for lack of a better word, the more reliable it is. So the range that I was trading was this one here that started at the ending of May. So the range that I was quote unquote relying on didn't have any longevity to it, right? It was only a few trading days. And then, you know, and I missed seeing the gap here and a potential gap fill. Again, we're in a bull market. And, you know, I took a chance, thought that the trade would have worked in our favor, but it didn't. So I'm kind of all over the place with this. So let me recap really quickly. Try to trade the range like we've been doing for the past 2 months, and we've been extremely successful with the range. But as opposed to looking at this entire range where the low is 57.65 and the high of 61, with the high of 66.86, I decided to play this this shorter range, and it proved to be not the best of ideas, at least in the interim, because we crashed, but here we are, we're sitting at 62.15. So trade and data did not work out. All right, so the lesson for this is the longer the range or the longer the pattern, the more reliable it is, in my opinion. All right, so the next trade that actually we were stopped out of, actually, I need to say something else about data before I move on. Or not data, but just trading in general. When you're right on a trade, you're going to see profit, as they say, almost immediately, right? So you're either going to be break even or you're going to be in profit. With this particular trade, we took the trade on Friday. We were stopped out, no kidding. I want to say 9:45 or between 9:30 and 9:45 Monday morning. So clearly we're in the negative right off the bat. So what that says is not necessarily we were wrong on direction, but we weren't right in that moment in terms of timing and direction. Okay, so when you're right on a trade, chances are you're either going to be break even or it'll show profits almost immediately. The next trade that why is it doing that? Hold on a second. All right, I'm back. Just had to fix my chart a little bit. Anyway, so the next trade that we were stopped out of relatively quickly, not the next day, but I don't think we actually had 5 trading days in this trade. Once again, not proving, but just kind of like giving more credence or substantiating a little bit more about what I said earlier regarding when you're sort of right on a trade, oftentimes you're in profit or at least break even almost immediately. So with Twtr, again, we got stopped out relatively quickly. Got in this trade, I want to say, God, when did we get in this trade? I don't know, somewhere around here with a buy zone of 17 to like 1750. Now, I wasn't trading the range in this particular chart. The pattern that I was trading, again, is I have several patterns that I trade. Range bound consolidation is one. It just so happens that that's been the one that has been more or less successful for us for the past 2 months. And so, you know, if it's not broke, why fix it? Or if it ain't broke, why fix it? But this particular pattern, and I haven't gone through it much, maybe at some point I will, is just essentially trading a stock once it reverses and it has a new trend. So the trend for Twtr, if you look at the daily, has been declining, right? Then we gapped up and I said to myself, well, it looks like there potentially might be a change in direction. And so I decided to go long with a buy zone of 17 to 1750. Once again, the trade proved to not be the best because we were actually stopped out technically from a price point on that Friday. I think we took the trade Wednesday, but I didn't close the trade because I thought, well, you know, there was a sell-off in tech on Friday. Maybe that just kind of got caught up in the wind or the storm. Let's see what happens the following week. And sure enough, that Monday we were stopped out of our trade. So again, this trade didn't work for us. We were stopped out, I would say, yeah, probably before 10 o'clock. So 2 trades on Monday, didn't look so good, stopped out of data, stopped out of Twtr. And then there was obviously some level of redemption, and our redemption on that day, so it was a very busy Monday for us, was this particular trade, ticker symbol DY. We weren't in this trade for a very long time. So stock gap down. And I tend to trade this a lot, trying to catch that quote-unquote dead cat bounce. I tend to do this a lot. So we sold off 1, 2, 3, 4 days. And I ended up taking, or the community took the trade around here, between 81 to 83, a buy zone of 81 to 83. And pretty much we went as high as 90, 70. So it took, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. About 10 trading days to go from a buy zone of 81 to 83 to a high of 90, representing something like 7 to 9 points or 6 to 9 points in a span of 10 days. So that was a little bit of redemption. We got stopped out of 2 at 3% each. That's what we do. We usually stop out at 3% and we start locking in around 9%. But if you've been listening to my videos, you know my motto is buy and kind of hold if that stock is showing you a profit. Lock in profits along the way, but you want to hold on. That's essentially how you beat them, and them being, you know, the market. So with risking 3%, starting to lock in profit at 9+%, what we've effectively done is we have a risk reward ratio of about 1 to 3. So if you go to shortmetina.com, search my website, risk versus reward, I explain that a little bit more into detail and why it works for us or for me here in the community. At any rate, I am super tired. It's almost midnight Eastern time. I have been doing a hell of a lot forging connections, networking, so I can definitely deliver bigger and better content to my subscribers and the trading community. So we're doing a lot of great things at shortmetina.com. So head on over, shortmetina.com, sign up, become a member, join the team, join the community. Once again, thanks for listening, and as always, thank you so much for the support.